Post. Just give me a minute, students. I'm joining you. Only thing is I'm not able to share my screen. Okay. So good evening, everyone. We are just starting off with the program. Just give me a minute. Right. So today is the first class that we're taking revision. What I would like to tell you is we would be going topic wise and we would be doing questions from the study hub, right, for each topic. So we are starting off revision with activity-based costing. So what I am going to do is we are going to first revise the main areas on activity-based costing. So I just want to see if everyone has joined in. Okay, so, right. So the revision program, I first want to know the students here. I think most of you are from from the January batch. Any students from outside or external students here? Meaning if you are self-studying or if you are joining in from another institution, anyone who is not from my class here. See if you can just tell me if there's anyone from out. Most of the names I'm very familiar with. Hi, Teresa. So you are you a self-studying student? If I can just be aware. Is it only Teresa who is not from my class? What about the others? Asma is from October batch, so you're doing the exams in June then. So I believe everyone's doing the exam in June. Okay, great. Right. So we are just starting off with, if anyone has any concerns, can get my number from the WhatsApp group and you can message me or you can even ask your doubts here in class, right? So today we would be starting off with activity-based costing. I'm just going to be summarizing the area first before we go on to questions, right? Hello, Abdullah. So you're Dilshan, right? Hello. So you're self-studying, right? Okay, so what I'm going to do is I'm going to roughly go through my slides. These are very short, so it's also like a very short note, right? I'm just going to be talking to you about the important areas on ABC costing, and then we are going to be doing papers from the study hub, right? I'm going to be very particular that I'm going to be doing new questions, especially for students who are from my class. I'm not going to be repeating any question that we have already done in class. It's going to be new questions that we are taking on in the revision session. And also, I would like to inform students that you all can collect your doubts while you're studying. You all would have come across questions that are difficult to solve. You can also collect those questions during the week, send it in the group. So after we have finished the day's revision, maybe 15 to 20 minutes, I would take to clear your doubts, right? Okay, hello, Ihsan. You're all self-studying, right? Okay. So now we come to activity-based costing. So just activity-based costing is a type of costing where you are trying to, like any form of costing, you're trying to value a product and you're trying to give the product a cost, right? So ABC costing or activity-based costing is a method that you can use. Traditionally, you use marginal and absorption costing. Right. So what was the difference between this traditional absorption costing and activity-based costing? What you need to know is activity-based costing is an alternative to absorption costing. So instead of using absorption costing, we can use activity-based costing, right? It's an alternative, which recognizes that overheads are no longer driven by manufacturing activities. Yeah. So this under ABC costing, we understand that overheads. Now, the main benefit of using ABC costing is that overheads, right, organizations' overheads can be better allocated. Because your main aim behind using ABC costing is to understand your overhead cost better. Now, when you take cost, you have direct material, direct labor, direct overheads, which are very easy to trace to a product. But overhead costs are very difficult to trace, right? So using traditional absorption costing, you would have simply taken your total overheads divided by total labor hours, and you would have found an OAR, overhead per labor hour. That was using traditional absorption costing. But using ABC costing, you try to understand your overhead cost even better, right? And you try to give more meaning to your overhead cost and trace them more accurately to the products. So we understand here under ABC that overheads are no longer driven by only the number of units, because previously using absorption costing, we would have simply taken total overheads. You can either use labor hours or you could have also used number of units. You would have taken total overheads and you would have simply divided it by the number of units or the hours, and you would have simply taken overhead per unit. Right. But they are saying that overheads are no longer driven by the number of units. Overheads are driven by many other factors. So using ABC costing, we are looking for new ways to trace our overheads to products. Under absorption costing, the company may decide to absorb the overheads based on, under the traditional methods, we can absorb our overheads based on the number of labor hours, number of machine hours, or the prime cost of each unit. Simply, we use those three as a base. But ABC costing is not like that. Let's just, before we go to ABC costing, let's recap, right? And let's look at how you dealt with overheads using absorption costing. Using absorption costing, overheads were allocated to products using a three-stage procedure. Overheads are allocated or apportioned to the different cost centers. I hope you remember this from your MA syllabus or from previous studies, right? Overheads were simply put into the production centers. And if there were any overheads in the service centers, we reapportioned it and put it back to the production center. In the stage 3, we took the total overheads divided by total number of units and we absorbed it into the units using an overhead absorption rate. How did we calculate this overhead absorption rate? We took the total budgeted overheads, we divided it by the activity level. Now this activity level can either be labor hours, it could have either been number of units. This is how we traditionally did it. The budgeted activity level is usually taken as direct labor hours, machine hours, or number of units. Then you use this OAR to calculate the cost per unit. If either or both of the actual overhead cost or activity volume differed, the rate would have led to something called over-under absorption. Sometimes we would have overly absorbed or we would have under-absorbed overheads because we use this system. So this is how that happened. Example, a company uses an overhead absorption rate of 3.5 per machine hour. So your rate is for every machine hour, there is an overhead of 3.5. Based on 32,000 budgeted machine hours. So to calculate this 3.5, you use 32,000 machine hours. Meaning you took your total budgeted overheads divided by 32,000 machine hours to find this 3.5. During the same period, the actual total overhead expenditure was 108,875. This was actual. And 30,000 machine hours were recorded on actual production. So your overheads absorbed would have been 3.5 per machine hour into 30,000 actual hours. According to your overhead rate, for the 30,000 hours, your overhead should have been 105,000. But actually, it was 108,875. Meaning you have absorbed lesser than you should have. Because you use this rate, you have absorbed lesser than you should have. So there is an under absorption. But with activity-based now, we are trying to take overheads and we take the breakdown of overheads. We don't simply take total overheads. We try to understand what are the different overheads hidden in this. And you break down your total overheads into several subcategories. You break down your total overheads into several subcategories. It could come like, okay, ordering cost, setup cost, delivery cost. You break it down. You find what are the different overheads inside this, right? So you kind of break it down in that manner. And you, along with that, you try to find a cost driver. For example, look here. Now you have broken it down, ordering cost, setup cost, packaging cost. For ordering cost, you find a cost driver, meaning what is the factor that drives this cost. For example, for ordering cost, it's number of orders. So when number of orders increases, ordering cost increases. For setup cost, it's number of setups. So if number of setups increase, setup cost will increase with that. For packaging, it's number of packaging. So if number of packaging increases, so if you package more units, the packaging cost also will increase in line with that. So we are basically trying to find different overheads, break it down, and find the cost driver for each as well, right? So with ABC costing, this is what we try to do. We try to give more meaning to our overheads. Then we use a 5-step approach, which is quite a long approach because you have more workings involved, right? But it is more accurate. So step 1, you identify the different activities, meaning you identify the different subcategories of the overheads. Kind of you break your total overheads into several activities. So you identified what are the different activities that makes my total overhead. Then you allocate the cost for each activity. Then you identify a cost driver for each of them. Then you find the cost per driver. How do you do that? You take the total overhead for each activity, meaning, for example, total ordering cost. Divide by the total drivers, meaning what? Total ordering cost divide by total number of orders. What do you find then? Total ordering cost divide by total number of orders. What will you find? You will find cost per order. Then you take total setup cost divide by number of setups. What will you find? You will find cost per setup. Then you take total packaging cost divide by number of packaging orders. What will you find? Cost per packaging order. So you find the cost per driver for each and every activity. Step number 5, you absorb the overhead cost into the product. So for example, if your product has 2 orders, then cost per order into 2. If it has 2 setups, then cost per setup into 2. If it has 1 packaging, then that cost per packaging into 1. That way you absorb it into the product. We will do a question as well. So before we go to advantages, let's look at a question from the study hub, which has not been done. I think people have joined in. So I'm going to practice from the study hub itself. And we're going to look for yeah, we can do brick by brick. Someone's speaking. So I'm going to use Excel sheets for the workings. All right, so we're going to set the screen up and then start reading. So brick by brick is a question from the study hub. Okay. Brick by brick provides a range of building services, including garage. I'm just going to keep it. Brick by brick provides a range of is a moment. Just give me a moment. I'll just disconnect it. It's okay. So brick by brick it provides a range of building services, including garage conversions and extensions to properties. So this is a building service company. BBB has a policy to price all jobs at budgeted total cost plus 50%. Overheads are currently absorbed on a labor hour basis. So currently they are using labor hours. That means they are using absorption costing. So they're simply taking total overheads and dividing by total labor hours. And they're finding an OAR. And they're using that OAR to absorb overheads. That's what they're doing currently. However, BBB has found that it has fewer GC contracts than expected, and it believes that this is because the current overhead absorption method apportions an excessive amount of overheads to GC. Using the current method, that is using the OAR, we are absorbing more overheads for GC. Maybe GC is taking more labor hours. So because of that, more overheads are just going towards GC, leading to a price that is very uncompetitive as well. The company is now considering moving to an activity-based approach. You are provided with the following data relating to the total overheads incurred in the GCs and the EXs. Overheads, now see they have divided the total overhead into 3 different categories: supervision, planning, property related. Annual overheads are given, the breakdown, the costs. Activity driver, they have matched it up. Yes. Supervision is related or driven by site visits. And there are 500 visits. For the 500 visits, the total supervision cost is 90,000. Planning 70,000. It's driven by planning documents. There are 250. Property related 240,000 labor hours. That's driven by labor hours. There are 40,000 labor hours. A typical GC costs 3,500 in material and takes 300 labor hours to complete. A GC requires only one site visit by supervisor and needs only one planning document to be raised. In all cases, labor is paid at 15 per hour. What is the sales price of a typical GC using the current method of absorbing overheads? Using the current method, they want you to do first using the current method. Oh, someone wants the TRG link. One moment. I think not everyone has joined. I'm just going to send this in our group. Students from... Right. So what is the sales price now? This is brick by brick. So they want the sales price using the current method. So what's the current method of absorbing overheads? You're using traditional absorption costing. You're calculating an OAR based on total overheads. You're dividing it by labor hours. They mentioned, right? They're using labor hours, total labor hours. So the total overheads was 400,000 here altogether. And this was divided by 40,000. So the OAR or the overhead per labor hour was $10 per labor. Okay, that's the current method. They want you to find the sales price. So GC, cost per unit of GC would be, how do they derive the sales price? Here they have very clearly told you the price of the product is taken as price of the product is taken at total cost plus 50%. It's not highlighted. Okay. So we're going to find the total cost of GC. A typical GC costs material 3,500. And it takes 3,000 hours to complete. So meaning 3,000 labor hours. GC requires only one site visit by supervisor and only needs one planning document. Labor is paid at 15 per hour. So labor would be 300 labor hours into 15. And overheads would be 300. The overheads is 10 per labor hour. So 10 into for GC you need 300 labor hours. So overheads would have been 3,000, meaning the total cost of making GC would have been 11,000. So you have to take plus 50%, right? Read it. Total cost plus 50% to find the selling price. So plus 50%. Meaning the price of GC would have been quite high. So that maybe because of this, it was not competitive. 16,500. Next one. Next, let's move to the next question. What is the cost of a GC using ABC costing? Now, to follow ABC costing, you have to follow this 5 steps. Identify the activity, allocate the cost. So let's follow these 5 steps using ABC costing. That is to find the price, the cost of GC using ABC costing. Using ABC costing, we are mainly going to find the overhead cost. The material and labor cost will be the same, however. But okay, let's see how we allocate the overhead cost using ABC costing. Question 2. Right? Cost of GC using activity-based costing. So in order to use activity-based costing, follow these 5 steps. Right? identify the activities. It's generally the first three steps are done for you, right? It's always, almost always done for you, but sometimes you might have to do the third step, meaning identifying the cost driver. You might have to do it sometimes, very rarely, or else most of the time they have done 1, 2, 3 for you. So step number 1, let's just write down the steps here so it's easy for us. Step 1, identify the activity. Step 2, allocate the cost. This is also done for you. They have allocated the cost. Step 3, identify the cost drive. Now I'll just show you how they have done all this for us, right? You can see here, step 1, the activities. So I'm just going to say step 1, activities, which is supervision. They've identified it for us. Planning and property related. They've identified it for us. Then step 2, allocate the cost. Now that's also done. 90,000 for supervision. Cost. 90,000, 70,000, 240,000, a total overhead of 400,000. Then step 3, identify the cost driver. Now that's also done for you. Planning document. Sorry, site visit. Then for planning, it's planning document, right? Then for property related, it's labor hours, right? That's done for you. And they've also given you the number of site visits, 500, 250 planning documents, and 440,000, sorry, labor hours. All right. Now, step 4 is what, guys? Cost per driver. Step 4, find the cost per driver. How do you do that? Total overheads for each activity, meaning this, divided by the total drivers, meaning this. So here you can see the cost per driver. There is 90,000 total cost for supervision, and there's 500 site visits. So the cost per visit is 180. Here there is 70,000 overheads for planning. This came out of 250 planning documents. So the cost per planning document is here now. Property related 240,000. This is for 40,000 labor hours. So the cost per labor hour is also given there. The cost per labor hour is also given there. So it's 6 per labor hour. So we can take this as 180 per site visit, 280 per planning document. Let's just take it as PD, 6 per labor hour. So I'll take it as per L labor up. Okay. Now step 5, absorb the overhead cost into the product. Okay. So here it's quite simple. Now when we find the cost of GC, okay, you have material cost, which we already identified, 3,500. You have labor cost, which was, it took 300 hours to make a GC. So 300 into 15 per hour. So we have that as well. Now the overheads, we'll have to take it divided into 3. So firstly, the supervision. You can see here, they have told you, a GC requires only one site visit. So supervision, they only have one site visit. So one site visit meaning just 180. Because for one site visit, it's 180 per site visit. GC needs only one site visit. Then, next one, planning. You can see, and needs only one planning document. Only one planning document. That means just 280 per planning document. So just 280. Less overheads needed by GC. That's what we can see here. And last one, property related goes by labor hours. Property related, it goes by labor hours. And you know that GC took 300 labor hours. So 300 hours into 6 per labor hour. So that's quite high, but the other overheads were very less. So now let's calculate the total cost of GC. You can see it's quite low. It's 10,260. Someone saying something? Okay. So it is 10,260. Earlier when we did it the traditional way, it was 11,000. It was more, right? So now you can see it is lesser. All right, all right. I think before we go to the other one, can you quickly take notes on that? Especially the traditional method question 1. Just take a quick note on that. I just put my charger on to the laptop. All right. So did all of you understand how it is done? The absorption method and also then the ABC costing method. Anyone with any doubts with regard to this particular ABC costing question? I've just given you all some time to take this down. How many of you are making notes of it? Because mainly this recording will also not be available to be viewed. How many making notes? Sarvana is making. Okay, quickly copy it down. Once you all are done copying, just say done, right? Especially when you're done with question 1, so I can scroll down. Make it fast, or you can even take like pictures of it and copy it later, however. I think I'll just give you all a few minutes to take it down. I can do it. I can put it on one screen, right? What's it out? Once you finish the class, can you let us know the topic that will be tested? Miss, once you finish the class, can you let us know the topics that will be tested in ABC part of the question paper? Okay, I think I've already, I'll just go through that again. All right. I'll just go through in the classes. Anyone having any other things that you all want me to, what else do you all want me to go through like in the revision session? Anything in particular that you all would like me to do, please inform so I can plan accordingly. Anything in particular that you would want to know? I'm just giving some time. Can you focus on section 3 questions? Yes, okay. I will do it. Section 3 questions. Okay, what I would like to tell, okay, I think you guys just have to get an idea on this as well. I'll just take that one moment. I'll just go through this with you all about the paper because now someone already asked. So I'll also just brief you all on that. Okay, the sections. So you all know about the exam, right? The exam will be 3 hours. You have section A with 15 objective test questions of 2 marks each. So that'll be 30 marks there. Then you have section B with 3 objective test case studies. So it's a case study and 5 questions underneath that, but they will all be MCQ type questions in section B as well. One case, 5 MCQs, next case, 5 MCQs, case 3, another 5 MCQs. So there's 15 there as well. That will also be 2 marks each, and it will go on to a total of 30 marks. Section C, you have 2 constructed response questions, 1 and 2, right, of 20 marks each, right there. And this is what I think you all were talking about. Note that the performance management exam will both have discursive and computational elements. So you will have to do a lot of discussions, especially section C. You would notice there would be a lengthy question for discussion. For example, you will have to advise the company on how they performed, or you would have to tell them how they should improve performance, or you should be talking about what meaning your calculations give, right? You will be asked to discuss something of that nature, and you will also be getting computations. Even in your MCQs, there can be theory-based MCQs as well. So you cannot ignore your theory in order to pass the PM exam. It's very important that you study your theory, learn your theory, understand your theory before you go to the examination. So in my notes, I have also given equal importance to theory. I have main areas that could be tested. I have highlighted them. And computations are also very important. The calculations, how you do it. Guys, we also have, in addition to these revision sessions that we are doing, we have also our recorded sessions, which you can get from the institution if you contact them. There we have, I think now with this session, 8 papers that are done. So 8 papers in exam conditions, I have done it. Like, I think one recording will be 2.5, 3 hour length, right? So the full paper, I have done it. Even the discussions have been discussed as to how you write them. So please also try to get access to that revision session. That's Premier Plus. I think it is the recorded past papers. You can try to get access to that, because that will give you more knowledge on how you can face your exam in exam conditions itself, right? So you have objective test questions and objective test case study questions. Will therefore include a mix of calculation and explanation based questions. So don't think you can only pass this with calculations. Please give importance to explanation as well. There's likely to be a discussion element included in the constructed response questions as well, right? You have to give importance to the discussions as well. Then in section C, questions only come from syllabus areas C, D, and E. Now, this is what someone asked me. Section C questions, that means your 20-mark questions, can only come from C, D, and E. That means it can come from performance measurement. It can come from budgeting, material, variances. All of that can come in section C. Budgeting, analytical aspects of budgeting, learning curve, all that can come. Planning, operational variances. And section C, meaning relevant costing, cost volume profit analysis, limiting factor, pricing decision, make or buy. These are the only things that can come in section C. Meaning the costing part, which is section B, ABC, target costing, life cycle, throughput, these will only be in section B. That is why you can see now also the ABC costing question I am doing is from section B, because this can no longer come in section C. Now, some of you might ask me, especially if you are using the Kaplan study kit. In Kaplan, there are costing questions in section C, but that is old syllabus. Now the syllabus has been updated and costing can only come in section B, right? Even section A, that is management information system, users and control of information, big data analytics. This also you will only see in A and B. Even the costing, you will only see in section A and B. It will not come in section C, meaning these 2 areas will not come in section C, right? Section C, you expect this area, C, D, and E. I hope I cleared the doubt. Someone asked me now, no? Yeah. with potentially a bit of syllabus area A. Wait, syllabus area A can be tested. Like a little bit of it can be tested in section C, but costing will never come in section C, right? But not from syllabus area B, meaning costing is not going to come in section C at all. That is ABC costing, throughput, target costing, life cycle costing. You will never see it there. Section C questions from syllabus areas B and 20-mark questions from syllabus area A are just there for practice of topics. Meaning if it is they are in the study kits, it's just there for practice. Study hub you will not find because study hub is updated. It's updated for the relevant examination. So you will not find anything not going to be tested in the study hub. Study hub is the most updated version, right? Please, more than Kaplan, more than BPP, try to focus on the study hub. Because let me tell you something good. Study hub questions are repeating as well. Because it has just been introduced. So there's very high chance that questions from there are repeated as well. So your focus on revising questions, try to do much as possible questions from the study hub. Right, guys? If you manage to do all the questions there, you have a very, very, very good chance of passing with a good grade. Right, so focus a lot there. I'm saying you have to do questions from Kaplan as well, but towards the end, all your extra time, concentrate on doing questions on the study. Especially there are some very different types of questions. I told my students who are joining, meaning from my class, I have told them to already go through study hub questions and find the tough questions where we can, so they can send it in the group and we can discuss them in this revision program itself. Right, okay. Yeah, so that's there. Pass mark is 50%. You know that it's very easy to get this 50%, right? If you guys just follow simple guideline. I think I have shared with my students in class a study plan. I will also just go through that here. Okay, for students who are self-studying students. I'll share this as well in the group. This is a plan that I have put forward, but the only thing is you will not have the questions I have done in class. Okay. So what I tell students is you take 16 days if you are full-time students, but if you are a working lot, then you will take double that. So 16 days if you're full-time, if you are working, you'll take a month, right? Obviously to cover the relevant areas that we have done in class. So you start off with the first chapter, you go through my tutorial or my note, you go through whatever question I did in class. Okay. Or if you are self-studying students, you can go through questions that you did when you were self-studying, right? Just to remember things from what you have studied previously, because you would have forgotten. We started this 3 months before or 4 months before the program. So you would have forgotten certain aspects. Just to remind yourself, go through what you all studied at the beginning. Then I have given, these are actually questions that I have not done in the Kaplan book, the extra questions. All the others I have done. So I've given some to attempt as well. Then just like that, you do ABC, then attempt these 2 questions, then target costing, attempt these questions. So if you're a full-time student, you can do one area for one day. So morning you study, evening practice. Morning you study, evening you practice, something like that. But if you are working crowd, you will have to balance it in your schedule, right? So you take 15 days to go through what has been done, just to remind yourself. Then after that is over, you will need another 10 to 15 days for the more important things. Because this is a skill-based examination. So you have to develop your skills, especially on answering questions. So this first 16 to 30 days that you take will just be going through what has been done in class. Okay, watching like clips, maybe the recordings, all of that. Then the next 15 days is the most critical, right? You have to focus on your theory. Remember, for the PM paper, theory is very important because sometimes there can be a section B question and it can be all theoretical MCQs. So if you do not learn your theory, you will completely get stuck there, right? So you have to focus on theory, give theory equal importance. Should complete 100% of the revision kit. Now, if you had followed my classes and if you have done these questions, extra ones here, you would have completed that, right? Because I have only included here whatever I have not done in class. Then after that, now you would have finished this in your plan itself, right? Then cover the last 5 papers in the practice platform. For that, we have the Premier Plus recordings that you can get access to as well. These papers are very important because that is why I have given 15 days for this. Now, this is for full-time students, 15 days. If it's working lot, now you might need more time, right? Cover all the technical articles from ACCA, read through them. Above plan requires minimum 4 hours a day. More hours recommended for full-time student. But if you are working crowd, you'll have to balance your time and plan out appropriately, right? Last 10 days are exclusively for past papers. So when you're doing these past papers, what I mean is do questions from the study hub. Study hub and the practice platform. Study hub, practice platform. And wherever you go get stuck, go back to theory, find out that area. Or when you are doing questions from study hub, keep your books open, keep your theory open, keep your tutorials open book, right? Study that way so that when you are in the actual exam, you will know that, right? Practice platform, maybe if you have learned enough, you can do like self exams as well by yourself, because that platform will mark your paper for you. Attempt questions on the ACCA study hub. This is a plan. I can share it with the group as well. But only thing is you all will not have the questions I did in class. For that, you can use the questions that you all did while you all were studying as well. But guys, very important, right? Please focus on questions from this study hub. Now, this is the study hub, what I'm doing here. This is the study hub. So in this revision session also, now I'm doing questions from the study hub. So you will cover some questions joining these classes itself, right? So that means when you all are studying separately, you have a fewer questions to do because some you're also covering here. Now, let's continue on this question. I hope you all took pictures of that. Third one. They said a typical EX costs 8,000 in material and takes 500 hours of labor to complete. Each EX requires 6 site visits and 5 planning documents. What price should be quoted for a typical EX using a 50% markup on the activity-based cost? So we kind of have the information that we can use to calculate the cost of EX. I hope you all have taken pictures of this. Yeah, I'm just giving you one chance to take a picture of this because I don't think this recording, maybe it's available on YouTube after, but still just for, I'm not very sure about that. You can just take a picture of it. Okay. But I think it's streaming on YouTube, so you should be able to get it from there. Question 3. They wanted the cost of EX. Okay, so what do we know about EX? The cost of the unit of EX. Now they wanted the price of that unit, but to find the price, we first have to do the costing. Materials, 8,000. Takes 500 labor hours. So labor would be 500 hours into 15. Now overheads. Overheads would be, it requires 6 site visits. So for supervision, it was, I remember, 180. Supervision is 180 per site visit. Yeah, 180 to 80. So it will be 5 site visits. Each EX requires 6 site visits. 6 into 180. And 5 planning documents. So planning will be 5 documents into 280. And property related would be 6 per labor hour. So 300 hours into $6 per labor. I'm just doing this out of memory. Yeah. So the total overhead cost and the total cost altogether would be very high for EX. That's because they had a lot of drivers for it, right? And you have to also plus the 50% markup. Meaning the price of EX would be 29,670. Quite high. With its labor hours 300 of, isn't it? Oh, yes, sorry. It's 500 labor. You are right, guys. It's right. I'm sorry, I missed it. It's 500 labor hours. I'm so sorry, it's my mistake. Because for this, it's very good. You all spotted it. 500 into 6. Yes, it's quite high. 31,470. So you can see that EX had a lot of overheads towards it. It has 6 site visits, 5 planning documents, meaning the overhead cost for EC should be higher. So what happens is with ABC costing, your allocation of cost is more accurate. Your overhead costs are allocated more accurately. So your overhead costs are allocated more accurately. So your costing is also better, your pricing is also better. Previously, now the GX had very few overheads. So the price also should be lesser. Now the price here is more competitive. When we went, now here it was 16,500, but when we went according to this, the price was will be lesser, right? So taking the price, it will be lesser. At 50%, it will be lesser. So maybe we can charge a very competitive price when we go with ABC costing, because you can accurately calculate the cost of those products. Right. Then the following statements have been made about activity-based costing at BBB. Which of the above statements are true? The usefulness of ABC costing depends on the identification of the appropriate cost drivers. Yes, you have to identify the cost drivers properly. If that is not identified properly, then your entire ABC costing calculations will go wrong. So for your activity-based costing to be correct, you should identify the appropriate drivers. So that's right. ABC costing would lead to a clearer understanding of what drives cost at BBB. Yes, you would understand very clearly what is driving your overhead costs. So both are right. Because you can understand very clearly. So yes. Yeah. So your overhead drivers are more accurately identified as well. Next one. Which of the following statements regarding environmental activity-based costing are correct? What do you know about environmental activity-based costing? Let me just take the tutorial on that and just go through that with you guys. Environmental costing as a part of activity-based costing in it. And what do we know about it? Environmental activity-based costing. Normally, many environmental costs are hidden in general overheads and therefore apportioned. Environmental costs are generally hidden, right, in your overheads, and therefore it's apportioned to products using inappropriate drivers. This can mean that product costs do not truly reflect the environmental costs associated with making them. Why? Because we are unable to trace the environmental cost accurately. There are 2 types of environmental costs: environmental related cost. These costs can be traced to the joint cost center. This cost is related to the sewage plant or to another cost center. These costs can be traced to a cost center and can easily be identified. Another one is environmental driven costs. They tend to be hidden in the general overheads and they cannot be easily traced. For example, increased depreciation or higher cost of staff. So maybe the increased depreciation is because of using more expensive but environmental friendly products, or it could be because of using some sort of, okay, maybe the higher staff cost, maybe you're cleaning the environment and therefore there's a higher cost of staff, but this is not directly identified. So it is difficult to trace, right? The main methods of allocating these environmental driven costs might be the following: volume of emission or waste, toxicity of emission and waste treated, volume of emission treated, The relative cost of treating different types of emission. Now, for treating this emission, you need staff cost. Sometimes you will not identify that, right? So you have to try and identify where and when have the staff worked for environmental related activities. So for that, we can trace these things in the hope of finding it. Right? So let's go to the question. Environmental related costs can be allocated directly to a cost center. Environmental related costs, these can be traced to a cost center, yes, and can be easily identified, right? Costs categorized as environmental driven costs tend to be hidden in the overheads. Environmental driven costs tend to be hidden in the overheads, yes, right. This is what I said, theory. So you need to know the theory, otherwise you'll get stuck here. Environmental costs are considered from the design stage of a product through to the decommissioning. No, that's life cycle costing. So 1 and 2 meaning B. So we have completed this question, and that is on ABC costing. So anyone having more doubts on this area? Beckley Hill is a question that I have already done in class, so I'm not going to repeat it. So you can see if you are going to be doing further questions. Now there's less questions for you to do, but you all can give it a try, right? So we are only going to be doing one question from each lesson. We're just done with ABC costing. But we have to just go through the tutorials. So advantages of using this costing method. The cost, meaning the overhead costs, are more accurately allocated because you have understand the drivers and you understand the reasons why the overhead costs are coming in. So you can also more accurately trace the overhead costs to the products. It provides much better insight into what drives the overhead cost. You know about the drivers. So if you want to control the cost, you can control the drivers. When the drivers are controlled, automatically the cost also can be controlled. ABC can be applied to all overhead costs, not just the production overheads. It can be applied to all the overhead costs, right? Not only production overheads, all the overhead costs, you can use ABC. Problems, however, the following problems can arise. It may not be fully understood by managers, especially if they have not learned this. Especially if they are not from a financial background and they have not learned, or a management background. And if they do not know what this ABC costing is, it will be completely difficult for them. And therefore, they might not accept it as well. Staff within an organization may be resistant to change because this is a little complicated system. So they would have been easily calculating OAR. They'll wonder why they have to work so much and calculate so much for ABC costing. A lot of calculations required for ABC costing. This question, we only have a few overheads, but in a real business, you will have many, many overheads. So it will be a very lengthy process. Maybe not all staff would like to change. It is not easy to identify a single cost driver. This can be a very long process. Identifying the cost drivers may be a tough task, right? Compile detailed accounting records can be time consuming and costly to exercise. You'll need time and money to put this into practice as well. Another good thing, ABC can also be applied for service organizations. Mainly service organizations have high overheads. So for companies where there is high overheads, you need a good way to manage the overheads. So generally for companies that have very high overheads, like a service business, ABC costing will be more suitable. For companies with very tiny overheads or a very little bit of overheads, it doesn't make sense to spend time and money to use ABC costing. So for them, ABC costing may not be that appropriate because their overheads are very small. So they can use something like OAR to allocate the overheads. But for companies that have very high overhead values, it's better to use ABC costing. And service businesses also can use ABC costing. So because mainly for them only the overhead costs are high. Right, guys. Okay. So next, we'll be moving on to, I'm here to do management. I'm starting with costing. So next we do target costing and life cycle costing in today's class. I'll just give you all an overview of how I'm going to break the classes as well. So in today's class, we will be doing activity, target, life cycle. Next class, we will be doing throughput, environment, relevant, and cost volume profit analysis, second class. Third class, we will be doing limiting factors, pricing decisions, make or buy, dealing with risk and uncertainty. In the fourth revision class, we'll be doing budgetary control and performance measurement. We'll be doing that together. That's variances and this together. Because we have 5 classes, you can see, so I should be able to do one extra as well, right? Be covering all of these areas. I'll send a plan for that as well, right? But one thing, this class on the 24th, I will not be able to take. I will reschedule it to another day and inform you, right? The class on the 24th, I won't be able to take. I'll reschedule and inform you guys when it will be. Section C, budgeting can come, Abdullah. Section C, budgeting very often is tested. So when we are doing that area, we'll be doing section C questions, all right? I need to give a prayer break. What I will do is I will just go through the target costing and then no, I'll have to give the prayer break now because I haven't prayed Maghrib yet. Right. So we are 7 now. We'll come back at 7:25, 15 minutes. Yeah, 7:25. It's a small prayer break. You all can pray and come back. I haven't prayed Maghrib, so. All right, we can start again. So we're starting from target costing. So with target costing, actually these costing methods, there is no one good or wrong way of costing. The correct way of costing or which costing method is suitable for a business will depend on that business, the market that they operate in, the type of customers that they aim to sell their products at. It will all depend on that. Now, when I said ABC costing, I think I mentioned to you that it is more suitable where in your company, if the overhead costs are a big part of your total cost. And if you need to allocate your overhead costs better, ABC costing is very appropriate method. Target costing is very suitable in a competitive business environment where you are unable to set the price and where you have to take the market price. In a situation like that, target costing is the most appropriate costing method to use. So all of these methods are suitable depending on the situation that your business is in. So target costing is a market-driven approach. It calculates a target cost. Basically, if let's say you cannot change the selling price and you are a price taker, you have to go by the market price. So you can't increase your selling price in order to make more profits. So the only way that you can achieve the desired profit is to keep your cost under control. So target costing shows you a target for the cost in order to achieve a desired profit. So there are a few steps, right? You first identify the product. You specify what kind of product do I want to sell? What kind of market am I going to sell it in? What is the market conditions? What is the competitive environment? And what is the price in the market? You consider the surrounding or the environment around your product first. Then you consider the selling price based on the market. What is the price that I can sell my product at is your next consideration. Then you calculate the required profit. How much profit do I want? Is your third step. Your fourth step is to decide your target cost. How do you do it? The target price, that means the price you can sell it at, minus the profit that you want. Then you find your target cost. So it is the cost that represents the highest acceptable cost. You should try your best to keep cost at that level or below that. If cost goes above that, you cannot achieve your desired profit margin, right? So then if there is a difference between your current cost and your target cost, so let's say, for example, your current cost is 55 and your target cost is 50. So your current cost is $5 more than it should be. So then you have to find ways in closing that gap. My target cost is 50. Currently, my cost is 55. So there is a cost gap. There's a gap between what I want to achieve and what I am currently achieving. Then you will have to find ways to close that gap. Negotiate with your customers. If a cost gap still exists, that means you're unable to meet the target cost. Your cost is still higher and therefore you are unable to achieve your profit margin. One way you can achieve your profit margin is to try and increase the selling price. But that may be very impossible in this situation that you are in. But maybe you have one option. Maybe you can try to negotiate with your customers and try to convince them to buy your product at a higher price. Very rarely you should be able to do that. But best is try to meet the target cost by many ways of reducing cost. But you have to make sure the quality is not compromised. So here there's an example. Your selling price was 100. You wanted to achieve a 30% profit margin. So 30% of 100 was $30 profit you wanted. 100 selling price minus 30 profit that you want, meaning your cost should be 70. So your cost is 70. Then if you sell at 100, you can make a profit of 30. Right? So cost gap is the difference between your current cost and your target cost. Let's say your current cost is 78, but your target cost was 70. So that means there's a cost gap of $8. Your cost is higher by $8. You wanted 70, currently it's 78. So you have to try and increase that $8 difference. So how do you reduce this cost gap? That can be tested in theoretical ways. How do you reduce a cost gap? A cost gap, in order to reduce, you should try to reduce your current cost now. So you should try to reduce all the different costs from materials. For materials, try to eliminate any unnecessary material wastage. Find alternative cheaper materials. Make sure the quality is never compromised. Labor, try to reduce the labor cost. Maybe make the laborers more motivated, productive, so that they finish their work quicker. Try to use lower skill labor because it's cheaper, but you have to still make sure the quality is not compromised. Increase the productivity and morale of staff so that they automatically work better. Other areas that you can look in is reduce the automation, increase the automation, because although automation can be expensive now, it will be cheaper in the long run. That will reduce your cost in the long run. Then reduce incidence of cost drivers, meaning reduce the number of setups, reduce the number of deliveries. What happens then? The overheads fall. Consider alternative product designs. Redesign your product in a simple manner so that the production is simple, lesser material needed, lesser labor time needed. So cost will fall. So when they ask you to suggest ways to reduce a cost gap, thinking all these ways, right? You have to think in all the ways of how to reduce cost. In all different costs, you should try to find a way to reduce it. So you have, this is very common. They might ask you to suggest how to reduce a cost gap. Review the product features, remove features that do not add to cost. If your product has certain remove features that add to cost. If your product has certain features, customers are not valuing them much, but you have included it. So it's really not necessary. Try to remove those features out because customer does not value it. It's just adding to your cost. So just remove those features. Use a team approach, like put people in a team and make them discuss on how to reduce cost further. Review your entire supply chain, meaning like find cheaper alternative suppliers who can probably give you good bulk discounts. Get more quotations from new suppliers, maybe overseas suppliers. Try to see where can I get my material for cheaper, but the same quality. Improve your efficiency so that productivity will rise, motivation can also improve efficiency, make your workers work faster. For that, they need to be motivated, right? And try to reduce the idle time wherever possible. If workers are taking unnecessary time, try to reduce it because idle time causes wastage and unnecessary labor costs being unnecessarily paid. Where necessary, standardize your product because then it can be made like standardized products leads to economies of scale, and economies of scale can lead to lower average cost. Automation also is very good way of reducing your cost, but automation will increase cost in the present, but in the future it will reduce cost. So these are all ways you can consider to reduce a cost gap. Target costing can also be used in the service sector. These are some features of services. Like services are spontaneous. It happens in the same time that it's produced and consumed. It's perishable after the service is over. You cannot expect that to be again provided in the same way. Intangible services cannot be touched. They're unique, like the service provider will, depending on the service provider, the service will also change. So it's unique. And you cannot transfer ownership. Let's say I'm doing a class here, I'm sharing my knowledge. It's not something like my knowledge is moving out of me and getting into you. It's like it's sharing, right? But products are not like that. When you sell a product, it goes away from me and it comes to you. But services are not like that. There's no ownership transferring that's happening. These are some features of services. I think you all already know, so I'm not emphasizing much. I'm just only roughly going through the notes because my main focus is to do questions from the study hub. You will always find that target costing questions and life cycle costing questions come together. So what I'm going to do is, before I go to a question, I'm going to also briefly explain life cycle costing. Okay, this is the third way. So life cycle costing now in present days, guys, you know that many products have a very short life cycle, meaning they survive in the market maybe for 1 year. Like you take the Apple iPhones, right? Every year a new phone is launched, or every 1.5 years, I think, a new phone is launched. So what happens? The previous phone's life cycle is just 1 year, right? So products, very technologically driven products, have very short life cycles. Life cycle meaning how long a product exists in a market, right? So you're tracking the life cycle of a product from development to the decline. So there are 5 stages: research and development, where you are just researching and coming up with something. In that stage, you don't sell anything. It's very expensive. Only research is happening. Then there comes a point, if your research is successful and if you have developed a good enough product, you will introduce that product to the market. And if when you're introducing, you have to let people know about your product. So there's a heavy amount of advertising that happens, and your sales could be very slow in this stage. You might not be making that much profits. You may be making losses. If the market accepts your product, you can expect your product to go into a growth stage where more and more customers start buying your product. And in this stage, your profits might start rising. After a certain point, your growth also stabilizes. So your growth, it's not growing anymore, but you have a good market share. It's on the top. That's called your maturity stage, right? Your sales are quite stable at the top. Here you make your greatest amount of profits, but you should try to make sure that the product stays there for a long time. And you have to try to like keep the product alive at that stage, right? Do promotions, do adjustments to product, keep it alive. But after a certain point, there may be time that your product declines. It's no longer needed. It's outdated. New versions have come in. It declines, right? So different products. Now, Coca-Cola has had this life cycle for a very long time. They are over 35 years in the market now. 30, 40 years they're in the market now, right? So they have a very long life cycle and in the maturity stage. But I think recently they're declining because of like health consciousness and all of that, right? So every product goes through its life cycle. This is how its life cycle goes. So, sales starts at the introduction, growth, maturity sales are quite stable, and then at decline it falls. Losses in the development introduction stage, you often find losses. At growth stage, some profit is made. Maturity of profit is the highest. At decline, the profits again fall. Now, how do you do life cycle costing? You simply take your cost over the entire life cycle. So there's an example here. So you can say year 1, year 2, year 3, year 4. These are estimates. Life cycle costing is purely on estimates. So you're estimating that your product is going to stay for 5 years in this question. And each year you can see the Yeah, I understood. Okay. So here you have estimated that your product is going to be in the market for 5 years. And you have estimated that in year 1, you're not going to be selling anything. In year 2, you plan to sell 12,000 units, 20,000, and here 7,400 units. Your planned cost in year 1 for market research and product design is over 800,000 and 2.3 million for product design. Advertising is going to happen in 2, 3, and 4 years. Right, so 1.5 million, 2.1, 400,000 is our advertising budgets. Manufacturing cost per unit is given as 110 per unit in 2002, and then it's falling to 95 per unit in 2003, and it's 115 per product in year 4. And your disposal cost, that means the decline stage, there's a disposal cost of 300,000. You are required to calculate the life cycle cost per unit of T. So how do you calculate your life cycle cost? It's very simple. It's simply, okay, just take the totals. So total production is 39,000. Total market research 800,000. Product design 2.3. Total advertising cost is the addition of all three. It's 4 million. Manufacturing cost, now how do you find this? 110 per unit into 12,000 units. You can check that. Comes to 1.3 or 1,320,000. In year 3, 95 into 20,000. 95 per unit into 20,000 units. 1.9 million. In year 4, 115 per unit into 7,000 units. 805,000. So you add that manufacturing cost together and the disposal cost as well. So your total cost over the entire life cycle is 11,425,000. How do you find life cycle cost per unit? Very simple. Total cost incurred over the entire life cycle divided by total units. So total cost is the addition of all the costs. Total units is the units. So you get life cycle cost per unit. Right? So the benefits of using life cycle costing is that a true picture of your entire product's life cycle profit is calculated. So you get a true picture of the product's profit over its entire life cycle. Your decision making also will be better because of that. Especially for products that have a very short life cycle, this is more suitable. There are long-term positive implications for the company's decision-making and planning. Identifying the cost incurred during the different stages of a product life cycle provides an insight into understanding and managing the total cost incurred throughout the life cycle as well. When you know what and what costs are coming at which stage, you can also manage it better. Non-production costs will become more visible. You can clearly see what cost you are forecasting to happen in the future. And to become more visible, and also you can control it better, because when you identify the cost, you also form a mechanism to control it. So controlling of the cost is also better because you have forecasted the cost well in advance. So what you need to know is you try to maximize a product's return over the life cycle. You will try to get the maximum possible return from your product. But in order to get that, you have a few things that you have to keep in mind. If you want to make most out of your product, you have to keep a few things in mind. Design cost. 90% of your life cycle cost comes at the design stage. You have to make sure you design a simple product. If you design a complicated product, then throughout the life cycle, you have to make that complicated product. So make sure you design a simple product with where raw materials are readily available. Don't go to make a product with a raw material that's very rarely available. So it will be very difficult to find it, right? So design a product that's simple, because 90% of your costs are determined at the design stage. Minimize the time to the market. If you have a good idea, try to get out there first before any other player gets in. Because if you are the first to enter, you are remembered longer. Like Pick Me in Sri Lanka, right? We remember the company very much more than any other taxi company that came in later. Maximize the length of the life cycle. Try to keep the product relevant in the market for long as possible. So for that, you have to try and get the product quickly as possible, find other users or markets for the product, try to sell your product in different locations, try to enter using market skimming with a high price, and try to break into the market as a different product so that you can survive longer. Minimize your break-even time, meaning try to quickly sell units, right, so that you can easily break even. So in the life cycle stage, there are a few costs that are involved. For the purpose of life cycle costing, 3 stages can be identified: planning and design stage, your manufacturing stage, and your service and abandonment stage. Planning and design stage is your first stage, where before you get the product out. Manufacturing is where you manufacture it. Service is where you're providing the service, and abandonment is when it's going out. There are 3 kinds of costs involved. At the planning and design stage, your cost is going to be the highest, or it's going to be really high committed cost. The committed cost is very high, but your costs incurred are very less, but your commitments are really high at that stage. Even at manufacturing and sales, your committed costs are quite high, right? And even the committed cost, can you see it keeps increasing and quite stable here. Cost incurred, here it's very low. At the manufacturing stage, the cost incurred is the highest. And when you are finally getting out of the market, again, the cost increases further because there's disposal cost and like redundancy payments and everything involved. During the planning and design phase, many of the decisions made about the product's design will determine the cost which will be incurred in the future. So it's very important there. Whatever plan you make initially will determine what cost you have to incur in the future. These are committed costs. Although they are not incurred during the design phase, the company is committed to incurring them in the future, mainly during the manufacturing stage. Tools such as target costing may be used to reduce such committed costs if they exceed what is acceptable. See? Cost behavior in the product life cycle. Planning and design stage, there's a lot of fixed cost involved: product design, building prototypes, market research. Manufacturing and sales stage, you have fixed costs, which are marketing and advertising, fixed production, sales overheads, design, updating. Your variable cost will be your material and components that you buy for manufacture, your direct labor, your variable production and non-production overheads, and your sales commission. In the service and abandonment stage, you have fixed costs like decommissioning, factories, disposal of products that you incur. Variable costs like servicing, which you may outsource, are also going to be incurred. So you should know these types of costs and when you will incur them. Right. So let's go to a question on that. Not find very big questions on this area. Volco I have already done in class. Try not to. Let's do method. I have not done this before. Right. This question is on life cycle costing. Also going to open the Excel sheet. This is the ABC costing question. Mithur's Co. manufactures air conditioning units and is considering an investment in a new unit that will be used in modern office buildings. Advances in technology mean that this unit is more sensitive to changes and variations in temperature, and therefore it can regulate airflow and heating more efficiently. Mithur's Co.'s competitors currently do not have an equivalent product that can offer. Okay. Mithur's Co.'s competitors currently do not have an equivalent product that can offer these features. Mithur's Co. expects to sell 10,000 units over the predicted 5-year life. Mithur's Co.'s competitors currently do not have an equivalent product that can offer these features. So Mithur's Co. is having a very unique feature. Mithur's Co. I don't know how to pronounce this. I'll just say MCO, right? MCO expects to sell 10,000 units over the predicted 5-year life cycle of the unit. The finance director has just prepared the initial costing for the unit as follows: research and development cost, design cost, marketing cost, variable production cost per unit, fixed production cost, variable distribution cost per unit, fixed distribution cost, variable selling cost per unit, fixed selling cost, administration cost. The finance director plans to use life cycle costing to measure the profitability of the new product. The chief executive has asked for more information about life cycle costing, and she is not sure whether it is the right method to use. The production director has reviewed the costing in detail and has suggested a couple of changes. He is enthusiastic about the product and believes that modifications could be made to prolong the product's life. They said the finance director plans to use life cycle costing to measure the profitability of the new product. The chief executive has asked for more information about life cycle costing, and she is not sure whether it is the right method to use. The production director has reviewed the costing in detail and suggested a couple of changes. He is enthusiastic about the product and believes that modifications could be made to prolong the product's life, but wonders when the best time would be to make the changes for the product. According to the life cycle costing method, which two of the following statements regarding the stages of the life cycle are true? Okay, let's identify. At the introduction stage, further capital expenditure will be needed as production capacity will need to increase. Okay, I'll just repeat this, guys. According to life cycle costing method, which two of the following statements regarding the stages of the life cycle are true? At the introduction stage, further capital investment will be needed as production capacity will need to increase to meet demand. At the introduction stage, will you need to increase production capacity to increase to meet the increased demand? What do you guys think? You guys tell me to see. Do you think the first one is right? At the introduction stage, further capital expenditure will be needed as production capacity will need to increase to meet the demand. Do you guys agree with that? At the introduction stage, you all tell me. At the introduction stage, there are two correct, right? At the introduction stage, further capital investment will be needed as the production capacity will need to increase to meet demand. Demand will be increasing in this stage, and you might need to increase further, but it's more likely to also happen during the growth stage. So just let's keep that there. Let's go to the next one, because in the growth stage only your sales increases a lot, right? So it can be right, because even in the introduction stage you might have to increase your production capacity, but mostly it might happen in the growth stage. I'm just keeping that option. The maturity stage occurs when the market has reached saturation point and bought enough of the product. Yes. Yes, maturity comes when you have, like, your market has come to the top point and they have bought enough of the product. So B. The majority of a product's life cycle costs are determined by decisions which are made at the design and development stage. Yes, that's also right. The growth stage, when sales will have reached their peak and become stable. No, that's not growth. Growth is still increasing. Will be the most profitable stage. But it's not reached their peak yet. And A also, I would say not right, because generally that production capacity needs to be increased like at the growth stage where the sales are increasing very fastly. So I'm just going with these two. Actually, it's A. B is wrong. Maturity stage occurs when the market has reached saturation point. Oh, wait. When the market has bought enough of the product, we expect decline to occur. So that's why B is not the answer. Guys, this is where it gets tricky. So these theory questions are not that easy to answer, right? So if you answer it in this manner, you will go wrong. You have to be very careful. That is why I did this, right? You have to be very careful when answering, because these words are in such a way where it can trick you. So let's read it again. Why we went wrong. Okay, let's see this one, the B one. The maturity stage occurs when the market has reached saturation point and bought enough of the product. Which means when the market has bought enough of the product, it will go into decline because everyone's bought it. So it will go into decline. These statements are correct, first ones. As capital expenditure is likely to increase at the introductory stage and the majority of the products costs are determined. The C is anyways right. Reaching a saturation point defines the decline stage of the product life cycle, and stability defines the maturity stage. Yes. So now it's like this. This is the maturity stage. The maturity stage is when sales will have reached their peak and become stable. It will be the most profitable stage. That's the maturity stage. This one is the decline stage. It occurs when the market has reached saturation point and now we have bought enough of the product, so it goes into decline. Here at the introduction stage, further capital investment will be needed as production capacity will need to increase to meet demand. So like I told you, it can be the answer because it depends. Now here, even in the introduction stage, the sales are increasing. So because of that, you may need extra capacity to meet up with that increase in sales. Actually, this can happen in two stages where you will need to increase production capacity. It can happen at the introduction and it can also happen at the growth stage. So please be very careful with this kind of theory questions. It might look very easy, but it is not. It's very tricky. Next one. What is the cost per unit for the new air conditioning unit using life cycle costing? So we'll have to take all the costs into consideration. Okay. So they want the cost per unit using life cycle costing, meaning we'll have to take total life cycle cost and we'll have to divide by total life cycle units. Total life cycle cost will be, I'm just going to take it like this, R&D, 6,200, design cost, 33,440, marketing. Please be very careful with theory, it can be really tricky. Variable production cost per unit is 42. You are aiming to sell 10,000 units. So variable production be 42 into 10,000 units. Sell 10,000 units over the predicted 5-year life of the unit. So 10,000 over the entire 5 years. Fixed production cost. So total production cost is, I'm just taking total production cost here. That's a total production cost. Then you further have variable distribution cost. Nine into 10,000 units. Please just correct me if my calculations are wrong anywhere. Like basically my multiplying or something like that. Anything wrong? Variable production cost per unit is 42 and there are 10,000 units. So 42 per unit into 10,000 units. Oh, wait, this is 42,000, right? Yeah, but everything is, it's 42,000 per unit into 10,000 units. I'm not taking the thousands, by the way. So there's 1,000 on the top here still. 3 zeros. And then variable selling cost per unit is 4,000 per unit into 10,000 units. Then fixed selling cost is and administration cost. So total estimated life cycle cost will be this in thousands, right? Divided by can be the nearest 1,000 divided by 10,000 units. Anything wrong? Why do you say it should be avoided, Saravanan? Okay, why avoided it? Why do you say it should be avoided? If you're saying it should be avoided, why, Saravanan?
No, miss.
Sir,
Should
I
be
have
added.
avoided. I can't
Should
hear you.
be.
Can you
It
type
should.
in, please?
Should be added, miss. It's avoided.
I have not taken, I have missed it. Yeah. It should
Yes.
be taken.
Yes.
You take all the life
Yes. Yes.
cycles. Sorry, I have not taken it. Because I've written it, but I have written the addition on top. So, comes to the nearest thousand, so yeah, that's your answer, right? So you simply take the total life cycle cost and divide by the total units. There are 3 zeros, guys, on the top here. So you just put that 3 zeros at the end. Can you all take it down quickly? Take it down fast. Take it down fast. And then the third question. The production director has suggested the following change for the costing of the new product. Currently, material costs are 20% of the variable production cost per unit. Currently, material costs are 20% of the variable production cost per unit. One of the materials used is stainless steel, which is budgeted at 2000 per unit, but an alternative corrosion resistant metal costing 25% less can be used. The production director believes a 15% discount can be negotiated for the remainder of the material. Okay, let's see. What's the material cost? Currently, material costs are 20% of variable costs. Variable production cost per unit. What is the variable production cost per unit? So let's take question 3 and let's break it down, right? So they are saying currently material cost is equal to 20% of the variable, let's read it again, 20% of the variable production cost per unit. Read it very carefully. Material costs are 20% of the variable production cost per unit. So meaning material cost is 8.4 per unit. All right. Then what do they say? Currently, material costs are 20% of the variable production cost per unit. One of the materials used is stainless steel, which is budgeted at 2000 per unit. 20% of the variable. Currently, material costs are 20% of the variable production cost per unit. Okay, variable production cost per unit is, variable production cost per unit is 42,000, right? Not 42. It's 42,000. So it is basically 8,400. Okay, then out of this, they are telling you Yeah, sorry guys. So yes, the material is 8,400. One of the materials used is stainless steel, which is budgeted at 2,400. So total material cost is 8,400. One of the material used is stainless steel. The stainless steel is budgeted to be 2,000 per unit. Okay. But an alternative corrosion resistant metal costing 25% less can be used. So instead of the stainless steel, you can use a corrosion resistant metal which costs 25% less. That means this was 2,000, right? That was 25% less, meaning you have to pay 75%. So it will be only 1,500. Can be used. The production director believes a 15% discount can be negotiated for the remainder of material. Remainder of material is how much? Remainder. Stainless steel is 2,000. That means remaining material is how much? Remaining material will be 8,400. Out of that 2,000 is stainless steel. Remaining material is 6,400. Now what are they saying? Now they are saying the new thing. The revised material cost is, they're asking what would be the revised material cost per unit. So for the revision, what are they saying? Instead of the stainless steel. Now for the material 8,400, how is this coming? 2,000 from stainless steel and 6,400 from the alternative. Adding this together, you get 8,400. The revision is, instead of the stainless steel, we can use a corrosion resistant metal that will cost 25% lesser. That means out of this stainless steel, compared to stainless steel, it will cost 25% lesser, which is 75%. And the remaining material, you can negotiate a 15% discount. So currently you're buying it for 6,400, we can get it for 85% of that. So therefore, you will now, the revised material cost will only be 6,940 per unit. Did all of you understand that? Did you all get it? Can all of you understood how we got this? It's mainly, we first have to identify the correct breakdown, right, Irshad, and others also. So you have to read it very carefully, find out how it is currently happening. And then you can very easily say, okay, instead of this, they are using this, which is 25% lesser. And the remaining material, we are getting a 15% discount. So we can find the new prices. Okay, so you have to first break down, especially when there's something like this, you have to make some short notes like this and understand what they're trying to say. These are all tips. When there's something like this, try to make the short notes and make it easy for your brain first so that you can easily understand what's happening. Because sometimes when you understand it that way, it's something simple. If you get confused with the sea of words, or if you get confused with the paragraph, then you can't do more than that. So first break down sentence by sentence and try to understand what they are saying. Right? Then it will be easy. The production director has also asked about the implications for production planning if the company wishes to extend the product's life cycle. So if they want to extend the product life cycle, at what stage of the life cycle is the unit most likely to undergo product development? At what stage will you more likely develop the product? Tell me to see. Product development will be undergone in which stage? At the introduction, growth, maturity, or decline, where will you develop the product? Introduction is already what you are introducing. Growth stage also you can make a few adjustments. But where will you develop the product further? Let's go with Afzal's answer, maturity. Yes, that's the right answer. Correct answer. Normally, product development occurs at the maturity stage because you wanted to stay in the market for long. So you try to extend the life cycle of your product. You try to keep your product at maturity for the longest time, right? So you do it by enhancing the features of your product and developing it a little further to keep it relevant in the market. Right, next one. The chief executive wants to be briefed on the advantages of using life cycle costing. So I'll ask you all tell me, right? Which of the following statements relating to the advantages of life cycle costing are correct? It draws management's attention to all costs related to a product, which other costing methods usually treat as a period cost. In a normal costing system, these life cycle costs will be treated as like, year 1, year 2 period cost. So is it true that when you use life cycle costing, your management's attention will be drawn to all the costs related to a product? Is that right? Do you all think statement one is right? When you use life cycle costing, management's attention will be, you know, spread through a lot towards all the costs. So therefore, it's more likely to identify more costs related to a product rather than just that years or that period's cost. Is that right? Without only looking at 1 year, we are looking at more costs relevant to a product. Is that right? Yes or no? Afzal, well, just tell me, do you all think it's right or wrong? It could be right, it could be wrong. Okay, I'll just read through the others also then. It focuses on measuring a product's cost from concept to withdrawal. That means from introduction to withdrawal. Rather than reviewing cost on a period by period basis. Without looking at cost by year, we are looking at cost from the conception to withdrawal. Is that right? We are looking at a product's cost from the time it's introduced till the time it's taken out. Okay, you all tell me at the end, will then. It focuses on what consumers are prepared to pay for a product and establishes cost budgets based on an expected selling price. What's that? What's that likely to be? You find the selling price first and then you try to identify a cost. What is that costing? You all tell me to see. In which costing? Target costing. Very good. So the third one is obviously not the answer. It's wrong. It aids understanding of the relationship between decisions at the design stage and the cost of other functions such as marketing. Like for example, we can understand how your decisions in the design stage are linked to other costs. Is that right? For example, the decisions you make at the design stage, how is it relevant to like marketing that you may have to do in the future? It's kind of trying to understand how things you do at the start will affect later on. Is that right? So which one do you think is the answer? 1, 2, and 4, no? Okay, we'll go with B. Period cost meaning these are like year cost, like 1 year's cost. When you see, normally we do financial statements for periods, like 1 year, right? Normally it's done year by year basis. Is right. 1, 2, and 4 is yours. Normally you do period, but life cycle is not that. No, we look beyond the period. Right. So then we are going, I want to just look at a target costing kind of question. Yeah, there's a question for target costing. Okay, let's do this question. It's a good question. Small case, but a few questions relating to it. Deco. Okay. Target costing question. Deco is a global consumer electronic manufacturer. It sells its own brand of smartphones, computers, and personal entertainment devices. It uses target costing. DPAD feasibility study results. The board of Deco has conducted a feasibility study in order to decide whether or not to launch a new device. The DPAD. In 2009, the DPAD will have 3-year life cycle over which a total of 80 million units will be sold. The variable production and selling cost of the D-pad is currently estimated to be 123 per unit. The total fixed product cost, including investment and overhead, is budgeted to be 3,360 million over the whole life cycle. The initial investment estimate of the selling price included in the feasibility study for the D-pad was calculated to ensure a profit markup of 60%. Where is the selling price of this? The variable manufacturing and selling cost is currently estimated at 123 per unit. Okay. Selling price is not given. Have they given selling price? No, they have not given. Okay. The initial estimate of the selling price included in the feasibility study for the D-pad was calculated to ensure a profit markup of 60%. They have given further. Market research analysis, the board decided to commission some market research to determine the price customers would be willing to pay for the D-pad. Sales volumes and sales prices were estimated for the various stages of the D-pad's product life cycle as follows. Introduction 8 million, growth 14, maturity 56 million units. Decline stage 2 million units. Sales prices initially 425, then 300, then 220. They are starting with a high price, skimming, and then reducing. So skimming, pricing strategy is skimming. Starting with 420, then going down 300, 220, 120. Based on the market analysis, the board has approved the development of the D-pad as long as the total product cost, including manufacturing, investment, and overhead, does not exceed 13,000 million. Retail outlets, the board of D is also considering the opening of a small retail outlet which will be located in the major cities around the world. Guys, when you're doing section B questions, you first read through the entire case. Definitely you will forget some parts. Then question by question, when you're going, you will realize this question is based on this paragraph. Then go and read that paragraph properly again. But first time, just get an idea of what is in the case. The board of DCO is also considering the opening of a small retail outlet which will be located in major cities around the world. The outlets as well as selling DCO's product will also hold free of charge surgeries where the product users can seek help on how to use their devices and have their devices repaired. The board has been discussing whether it is possible to use target costing in relation to the retail outlet. The following statements have been made. Director D, target costing cannot be used because it is difficult to estimate target selling prices for services. Okay. Director Y, target costing is most useful when what is being developed has a high degree of variability, such as developing new services. Okay. But like I told you, target costing is suitable for competitive environments. Because when you have something very different, then you can charge a high price. Okay, never mind. Director Z, target costing when developing new services is difficult. Because services are intangible and measuring a unit of service is not always possible. Maybe what he says makes more sense. It's very difficult, especially because for target costing, you have to start with a selling price. And that too should come from the market. So how are you going to take a selling price? It's come to, but it can be used for service businesses. But it should be a competitive environment. Then only target costing is suitable. Anyways, let's come to the question. Which of the following statements about the use of target costing at DCO are correct? I'll ask you all about it. It relies on just-in-time processors in order to work. Is target costing relevant to just-in-time? It can be used alongside life cycle costing and planning. What's the answer? It relies on just-in-time. First, tell me, is that even right? Amruti says B. It can be used alongside. Can't be since it's expensive. Target means to reduce the cost. Target means to reduce the cost. It relies on just-in-time processes in order to work. In order to reach your target cost, you can use just-in-time. That way also. Yeah, you can say that it relies on just-in-time processes in order to work. Not necessarily, but still, if you use just-in-time, you are more likely to achieve your target. Yeah. It can be used alongside life cycle costing and planning. Anyways, tell me what your answer is. Guys, I'll give you all one more chance. What's your answer? You all are saying 2 only. Okay, I'm going with your answer. We'll see. You all are correct. Right. It is first one, it's incorrect as just in time is often associated with cost reduction and performance improvement. It is not a requirement for target costing. Yeah, you don't have to only use just in time to reduce your cost. You can use many other ways, alternative approaches to reduce cost. So many is there. So what it could be is that just in time can be a method of achieving target. Yes, but it is not everything. So when they say it relies on just in time, no, it doesn't rely on it. Just in time can be used as a method, but just one method. There are so many other ways. So it doesn't rely on it. So because of that, it's wrong. Target costing can be used alongside life cycle costing and planning. Like during your life cycle. Now remember when we learned earlier also they said we can target, we are trying to keep our cost below this. So it's B. What was the initial selling price of the DPAT from the feasibility study results? So the initial selling price was what from the feasibility study? They're asking what was the initial cost, no? They're asking what was the initial, so what is the initial selling price of the DPAT from the feasibility study results? They're asking what is the initial selling price. Selling price, they told you the initial estimate of selling price including the feasibility was calculated to ensure profit markup of 60%. Initial selling price came as cost plus 60% markup. So what was the initial cost, guys? Within the initial, they wanted to make 80 million units. Okay, over the 3-year life. The variable manufacturing and selling cost is currently 123. So initial total variable and selling cost was 123 per unit into 80 million. Putting the million sign on the top. So many 6 zeros will come there. The total, one moment, guys. Yes. So the total variable and selling cost was that. Then the total fixed product cost, including investment and OS, is budgeted to be the total debt. Total fixed product cost, that's including everything, is budgeted to be 3,360. So total cost was estimated to be this much. And on this, you are planning to have a markup of 60%. So your sales revenue, you want to be this much. That is from how much, how many units? From 80 million units, right? So sales price per unit will be, what you can do is you take this divided by 80 million, 264. So initially you wanted to go with 264, but they have started with something else. 264. Don't know if I have done a mistake. Yeah, it's correct. 264. Right? If you all want to take it down, take it down. They're asking the sales price. That's why So we took the total revenue and then sales units 80 million. So how have I found the sales price per unit? Total sales revenue divided by 80 million. They're asking the selling price. Based on this study, they wanted to, based on this initial feasibility. Now this is market research analysis. The question was based on the question here was based on the feasibility study. So we had to take this feasibility study area. Based on the feasibility study, they wanted the selling price to be 60% of the total cost. So the total cost I take from here and add 60% to that. So this is my revenue, but that is from 80 million. No? So how much from what is the selling price per unit? I divide and find. Is that clear to all? Any doubts? Is that clear to all? Anyone having any doubts? Any doubts? Oh, no, they have asked per unit, right? Yeah. What is the initial selling price? So selling price meaning per unit. Risha, are you clear? Selling price meaning per unit, right? Here they have given the total cost. So this is the total cost, this is the total markup. So this is the total selling price. Can you understand? This is the total cost. This is the total profit they want. So this is the total sales revenue. That is from 80 million. So what is the selling price of 1 unit? Is that clear, Risha? Risha, are you clear? Next one, based on the market research analysis, what is the total cost gap of the DPAT? If Darasco wants to achieve a target profit margin of 45%. Now, this is based on the market research analysis. So, you can go to that paragraph and read. Based on the market research analysis, what is the total cost gap of the DPAT? If DCO wants to achieve a target profit margin of 45%, what is the cost gap? How to find it? The board decided to commission some market research to determine the price customers would be willing to pay at the DPAT. For the DPAT, sales volumes and sales prices were estimated for the various stages of the DPAT product life cycle as follows. Based on the market analysis, the board has approved the development of the DPAT as long as the total product cost, including manufacturing investment overheads, does not exceed 13,000 million. Based on the market research, the board has approved the development of the DPAT as long as the total product cost, including manufacturing investment and overheads, does not exceed 13,000. Meaning, this is the target cost. The target cost is 13,000. The target cost is 13,000 million. See? Based on the market research, the board has approved the development of the DPAT as long as the total cost, including manufacturing investment overheads, does not exceed 13 million. Meaning, the target cost is only given to you there. Question 3, no? Question 3. The target cost is given to you. Now, how do you find the current cost? Because to find the cost gap, you need the current cost. They have told you what is the total. If Terrasco wants to achieve target profit margin of 45%. Based on the market research analysis, what is the total cost gap of the DPAT? Based on the market research, what is the cost gap they're asking you? If DECO wants to achieve a target profit margin of 45%, what we can do is we can find their total sales. And using that total sales, we can apply the margin, yes, to that and reduce from the selling price the margin. Okay, what we can do is this. We can take the total sales. Just let's do this introduction. 8 million into 425. 14 into 300. Decline. That means the estimated total sales is how many million? Based on market research, the estimated total sales over the entire life cycle is this much. Okay. But they want to achieve a margin of, their margin is how much? Target profit margin of 45%. Margin is applied on selling price, right? Markup is applied on cost. That means their cost should be their cost. They're asking you what is the total cost gap. So what is the current cost? Is it mentioned somewhere? Based on the market analysis, the board has approved the development of the DPAT as long as the total production cost, including manufacturing investment, does not exceed 13,000 million. Okay, so basically based on the market research, their cost is 11,088, right? Based on that, this is this is what they want to achieve because this is their estimates, right? So based on this, they have a target they can achieve, right? They can achieve this much. So based on if they sell this and if they make a 45% margin, this is what they can achieve. But they have been given a target of 13,000. That means, what's the difference? 1,912. Yes, that's all. So let me explain that again. So they took your total sales 20,160,000, right? Then they want a target profit of 45%, meaning their cost should be this. So basically, this is their target cost. Okay. And this is their allowed cost. So basically, they are, it's not a cost gap kind of, they are keeping their cost under control by 1,912, but still that is the gap there. Because this is what they can achieve by what they have estimated, and this is what they are allowed to spend. So currently, this amount is 1,912 lesser. So that everyone understood that? Did everyone understand that? Based on their market research, this is their sales revenue. On that, they want a 45% margin. So when you remove the profit out, this is their target cost. But they're allowed to spend up to 13,000. That means they have a gap difference between what they are going to spend and what they're allowed to spend is 1,912. Okay. So, yeah. Next one. The following proposals have been made in order to close the cost gap of the DPAT. Introduce 24-hour working in the factories where the DPAT is made in order to increase production and build in inventory. If you introduce 24-hour working, is this a machine-intensive working environment? If you work 24 hours, will anyone get like motivated? Do you think it's going to work, guys? You all tell me. First one is okay. You all tell me the answer at the end. They're saying to introduce 24-hour working in the factories. Okay. I don't know if that's going to be really tiring though, but because then employees might be really tired. I don't know, but probably they can work in shifts where the DPAT is made not to increase production and build inventory. But anyways, that's just going to increase your production. They're asking how to reduce the cost, right? Okay. Incorporate quality assurance inspections into the manufacturing process to reduce faulty items. Now that will reduce waste. So when you reduce waste, you can reduce cost. Okay. Increase the sales and marketing spend in order to boost the sales volume of the DPAT. Boosting sales, third one. They're asking how to reduce cost. So which one is appropriate for reducing cost? You all tell me. Which one do you think the answer is? C, 2 only. Yes, correct. It's only C because this first one is just going to make your production build up. It's not about the cost. In fact, working 24 hours might make people very tired and it might demotivate them. It might actually increase the cost. Third is again about increasing sales. It's not about increasing or reducing the cost. So you have to think of what is going to reduce the cost. In relation to use of target costing for the retail outlets, which of the director's statements are correct? You tell me again. Director X says a target costing cannot be used because it is difficult to estimate target selling price for services. You can't use target costing for services. Is he right? Okay. I don't know. You all tell me. I'm just going to be very neutral here. I want the answer from you all. Director X, target costing cannot be used because it is difficult to estimate target selling prices for services. Okay, is that true? Why target costing is most useful when what is being developed has a high degree of variability, such as developing new services. For new services, just think whether you can use target costing. Can you find a competitive market selling price? I don't, you're telling me. Director is that target costing when developing new services is difficult because services are intangible and measuring a unit of service is not always possible. When developing a new service, it's difficult because services are intangible and measuring a unit of service is not always possible. Now, who is right? Which director you think is saying something meaningful? They're going to use this in a retail outlet. Which director do you think is right? Think and tell. First director is saying something controversial. He's saying that target costing cannot be used because it's difficult to estimate target selling price for services. Not all services. Some services you can estimate the target selling price. So maybe he's wrong. I don't know. You all tell me. What is right, guys? Okay. What will you answer in the exam? Which director you think is making sense? What is it, the answer? A, B, C, or D? You're still thinking? It's tough. Just tell me what I should go with. A. All are right. No, Ihsan, it can't be right. It's not right. Or not all are right. Let's go with Ihsan's answer. Let's see. No, it's not all right. Oh, where is that? It's wrong. Don't do. The answer is D. Only Z was right. I was giving you so many clues to say that only Z was right. Now see guys, the first guy is saying target costing cannot be used. It can be used in services, but it cannot be used when you say it's wrong because target costing can be used in service organizations provided that that service is a competitive service. Because target costing is used for competitive businesses. So when they say target costing cannot be used because it is difficult to estimate selling price for services, it's wrong. Because some services you can find the selling price. Then you can use target cost. So his statement is wrong. Why is saying that target costing is most useful when what is being developed is a very different, high degree of variability, very different product. He is saying for a very different product, you can use target costing. Why do you need to use target costing for a very different product? A different product doesn't have to go with a competitive selling price. It can go with like a monopoly power. It can go with a market skimming. So if the service is highly different, it's very difficult to use target costing. If the service is something that's readily available, you can use target costing. But when a product is very unique, even for a computer game that's very unique, you can't use target costing because it's something new. It's not available there. No other competitor is using. It's very tough to take the price from the market. You have to set your own price. In a situation like that, you won't use target costing, especially when you are going to set your own price. So why is also wrong? Your product is so unique, your service is so unique. Don't use target costing. It will be difficult because you won't have another competitor like you who will sell that high degree of variability or variable different product. So that guy is also wrong. It's not useful in a situation. See, Z is correct. Target costing when developing new services is difficult because it's something new. It's not available out there. So how do you get the selling price? For a service that's available, you can use target costing. But a unique service, you can't find it. So it's not useful. It's difficult to use. Because services are intangible and measuring a unit of service is not always possible. So in a situation, the service is very different, you won't use target costing. But it doesn't mean that you can't use target costing for a service that's readily available. If a service is readily available, you can use. So that's where what X said is right. Sorry, what X said was wrong because he said you cannot use it. You can use it when appropriate. When the service is readily available, you can use it. But when the service is very different, you can't use it. It's difficult to use. So what Z is only saying is right. Okay, guys. I hope you understood that. Then we have to move into throughput accounting, but I don't want to go there today because that will take forever. So we have some time remaining. So what I'm going to do is I'm going to do the first chapter. Guys, I think I already went through with all the syllabus, the exam and all of that. So you all have to go through the theory on management, information system and data analytics. Now for whoever who wants a good note to study this through, please refer to the study guide. The ones who have MyTutor can study only for MyTutor, no problem, because it's all summarized. So you all know that what data, information systems, the usefulness of that, what are the three types of why do you need information? You need it for planning, for control, for decision making. The three levels of planning: operational planning, bottom level planning, tactical, middle level planning, strategic, topmost level planning of the organization. You need to know that strategic is looking at the next 3 to 10 years. Tactical is looking at the next year. Operational planning is looking at day-to-day, weekly plans. I'm just roughly telling you, right? Information systems are systems where information is stored, right? So what are the benefits of having an information system? You can be more efficient. You can look for ways to reduce your cost. You can improve customer satisfaction. You can make better decisions because you have information stored. So using the right information, you can make the right decision and more quickly can make it, right? Easier access because the system stores everything. So anyone can easily, not anyone, whoever is authorized can access the information quickly. It can be spread and sent to others faster. There are costs of installing hardware costs, software costs, training. Like when you're installing the system, you have to spend for the hardware, the software, you have to train the people to use the system, you have to test the system, you have to maintain the system. And if the staff are disrupting or resisting, you have to break that resistance as well. So when you're installing a system, initially there are certain costs you will incur, and on a running basis, there are certain costs you will incur. Guys, you need to know all of this. Why? Because it can come in either MCQ type theory questions, or it can even very rarely come in section C. Very rarely, right? It can come in B, but very rarely you can get a question in section C as well. You need to know what the internet is, what the intranet is. Internet, it connects a lot of computers together from a variety of places. Intranet is an internal group of computers that's linked together. Extranet is intranets connected to each other. You should know the usefulness of Wi-Fi technology. Then this different, what you mean by local area network, what you mean by wide area network, what is a storage area network, virtual private network, what are these? You need to know the definitions of these. Do not ignore it. You need to know it, but it can come for a small question, right? Then, the controls, your information systems or information stored in your organizations need to be under correct control, right? You have to make sure that it's safeguarded. So there are different ways you can safeguard confidential information, having information security, privacy, right? Only have authorized people to access into it, protect the information from harm, like when someone hacking into your system. So there are a lot of general security controls that can be put in. You need to know about these. You can have Physical access controls, that means like security guards, cameras, time control, electronic door locks, right? You can have logical access controls like password, system password, usage logs, right? Callback security, dial back security is there when you're trying to log in into like a portal. They might ask you for an OTP, something like that. Those are all controlled so that nobody else is using your credit cards. So passwords are also a very commonly used method of securing a system. You need to know about this. You need to know what hacking is, right? What is trapdoor hacking and backdoor attacks? What are authorization attacks? You need to know all these different types of attacks that can come to your systems. How can you combat hacking, right? You can have physical security, logical security, system logs and audit trails, sentinels like watchdog programs, data encryption. You need to know all of this. What is encrypted? Encrypted meaning like they are using several computer technological methods to encrypt your data so that nobody can hack into that and nobody can read it. Only the people you share it can have access to it. Software audit trails, that means you like have audit trails to make sure that your softwares are secure, right? You basically you check your systems again and again to make sure that no third party can log into it. Testing your security or systems, you need to test the security of your systems very often to make sure that you don't have any cyber attacks from outside parties, and to make sure your systems, right, where you stored your information is very much protected and highly secured. So you can have some audit trails to make sure that everything is in place. Sources of information, then where you collect your information from. There are internal sources, external sources. Right. So the internal source of information comes from within your organization, that is from your company's accounting records, payroll, departmental records, from your customers, right? Then your external sources, your external sources of information can come from outside, like the government, financial institutions, competitors, the internet, public databases from outside. So when you collect information from outside, there are certain problems like quality, whether it meets your need, because it was collected for some other purpose. So will it be useful for you, right? And also sometimes not all the information you want, like for example, information about your competitors may not be readily available. So it's going to be challenging to collect this as well. Then you have primary and secondary data. Primary data you've collected for your own purpose. Secondary data, you're using somebody else's collected data, right? So you can use management information as a control, meaning strategic, tactical, and operational. Managers can all use information to make decisions, to control activities, right? To plan the long term of your business. Then we also, it's important, these are all new areas of the syllabus. Please refer to the moment. I've got a message. Yeah. So strategic planning and control information. So you know that, for the top level, you need like very detailed, you need very, not detailed, you need very summarized information. It needs to be external and also internal information, right? So these are the different kinds of information that are needed at different levels, and what the management will do with that information, right? So information is needed for tactical planning. Now, top level planning is about like profits by business segment, external factors affecting the business, present and potential market studies, investment appraisal. That is what they need, the information they need to plan the future of the company. Then for tactical planning, that's the next 12-month planning. They generally need like the analysis of sales product by product, the analysis by customer group, by geographical location, the inventory levels, the projected cash flow flows. Like that is what they need for the yearly planning. For day-to-day planning, they might need, right, the receivable level, the payable level, the customer complaint, the output record, the price differences in day-to-day prices. That is what they need for day-to-day planning. So they need different kind of information for different levels of planning. Then the management information systems, that means operational, they generally use like TPS. Tactical, they can use decision support and management information system. Strategic, they use the executive information system. That also you need to know. There are different types of management systems. You have the TPS for like normal data processing and data collection. This is used by operational level managers. Management information system is used like middle level managers, generally to make like decisions, and it's a summarized. They're taking the information from TPS and summarizing it. Right, decision support systems are used to make decisions. Like for example, GPS, they tell you, okay, you can travel in 2 different routes, but it just tells you what decisions you can make. The ultimate decision you make is your choice, right? So you have to take further analysis and decide on what you're going to do. Executive information system is used by strategic level management, right? They have a lot of data from outside collected here. So you know about the external environment and you can make your future plans using that data as well. Expert system is a system where you have collected knowledge from a group of experts. So it's like a knowledge system where a lot of knowledge is accumulated. And they also have an inference engine where you can go and search for expert reviews. So it's going to be very expensive to put this system up. But when it is up there, it's very useful to get specialist knowledge, especially if you do not know like information about certain areas. If you have the experts knowledge there, you can pull it out from an expert system. The enterprise resource planning system, it kind of fully integrates your whole organization together, right? Systems can be opened or closed. Closed system, you're isolated from the external environment. Open system, you easily communicate with the external environment. Customer relationship management is very important nowadays. This is a system that you use to keep good relationships with your customer, and you try to maintain good relationship with customer and retain the customers using this system, right? You select the customers to be targeted. You try to acquire new customer. You try to keep your existing customer. You try to extend your sales to the customers again and again, like pull in for repeat purchases. And you also try to give them good after sales service. You try to keep good relationship with your customers. Cloud computing is like iCloud, Google Drive, where we are storing our data on a cloud. So it's very safe. There are a lot of advantages of it because, you don't have to pay much for it. Also, especially you only pay for the amount of GBs you take. Backup is also there, very safely, it's secure, and the maintenance is all done by that provider like Google or Apple. They do the maintenance. And it's very easy for you to store there. So you need to know what that is. Then guys, also big data. What's the slide going on? Yeah, then big data, like, we have already discussed for MA also, where there's so much of data out there. So you need to know about big data, the features, right? How data is first taken, which makes no sense. Then some meaning is given to it and it becomes information. Then when you take when you understand your information better, like you link 2 pieces of information together, you gain knowledge. And when you take the right decisions based on the knowledge you have, you are said to act on wisdom. Right? So you need to know that. Then the benefits of having big data, like big data is when you have so much of information, like kind of when like through loyalty cards, supermarkets know about your purchasing habits. So when they know these things, what are the advantages they have? They can do better marketing. They can give better customer service because they know which customer is buying what. They form greater competitive strength. They can increase the customer loyalty by giving a better service because they understand the customer better. They can excel in the operational activities. They can also measure how well they have performed. But however, big data is at cost. It's very dangerous because you need a lot. Firstly, it's not danger. It's dangerous because it can be like stolen and personal information can go out. But in other terms, it's very costly to store this big data. You need a very good hardware and software to keep this stored. So it's very costly, and there are regulations like you are storing people's personal data sometimes. So there is laws that will govern you. In case it leaks out, you'll have to pay financial penalties. So sometimes your data might be too much that you miss out the important things as well, right? That problems are also there. Then also data analytics is a new area. So whoever is studying self-studying, please make sure you all have gone through this. Data analytics is about analyzing data, analyzing all the big data you have collected. When you analyze and try to get meaning to it, you are analyzing your data in more detail. It's called data analytics. There are several ways that the big data can be analyzed. There's data mining, right? Then there's predictive analysis, like what IPL uses to predict the performance of the players. And then based on that, they will pick who they think will, perform well at the IPL. But there are sometimes their predictions go wrong, sometimes it goes right. Predictive analysis, based on the data you have in the past, you take the players, their past, like last year's performance throughout all the World Cup, normal series, all the matches, they predict which player do we think they will do better, and they bid to them based on that. So they use predictive analysis to buy in the players. Text analysis is when you go through like paragraphs or messages and try to analyze the text. Voice analytics is when you go through like voice recordings and try to analyze the voice and what people are saying, what they like about a product, what they don't like about a product. So they are analyzing the voice. Statistical analytics is when you go through trends, correlations, and changes in behavior, and you try to deeply analyze why is this link there, what is the reason for it, will it continue in the future, things like that. So when you do analytics of data, you kind of understand a lot of things about your customers. So you can do better marketing, you can improve the service, you can keep your customers, you can excel at your operations, and you can even be competitive, because if you identified something before your competitor did, you can have competitive advantage. However, there are problems with this system of big data and data analytics. Sometimes you have too much of data that, sometimes some data is incorrect and out of date as well. So you make wrong conclusions. So incorrect conclusions are made, especially if you did not get the proper patterns. There are privacy and data protection issues as well. Is it right for companies to collect this data in this manner, right? And the cost of storing them is also pretty high. So data can be presented in many ways, like visualization of data is important. It can be presented in tables in the form of line charts, bar charts, pie charts, scatter graphs. You need to know all this, right? Bar charts are simple bar charts. Yeah, you have easily can see like the trends. You can use bar charts to compare period by period performance. Just understand this, right? Bar charts are used to predict or compare period by period performance. Even compound bar charts is very nice. You can see the difference very clearly. So bar charts are good for that. Component bar charts, you can see like each division, how much have they sold in each year. So it's also very clear. But when you go to see which slice is bigger than what, you can't clearly see. Yeah? You see, percentage is not very clear there, but you can roughly see how well they have performed. Percentage component bar chart. Scatter graph is showing relationship between two variables. But if it is not used properly, then it might not make sense. So you have to make sure that you have appropriately used your charts. Because there are certain situations that different methods are suitable. Now, if I tell you, line charts are very good to show trends. Bar charts are very good for comparisons. Pie charts can show the percentage clearly. Now, see, you can see which slice is bigger. If they put the percentage, it's more easy to see which slice is bigger. So, relatively comparing more to accuracy, pie chart will be better if the percentage is also given. Scatter graph is good to show the relationship between two variables. So there are situations that these charts are charts through which the information is presented to others. But there are situations where each of these methods are more suitable. So you have to make sure you're picking the right chart for the right situation as well. Otherwise, it will be inappropriate. So this is the first area, right? So now we are left with, we have finished in today's class these areas. Next class, I hope to do these 4 areas, right? Let's see. Throughput will take time, even relevant costing. At least I think next revision class, if I finish these 3, would be great. Okay, now you guys just tell me whether it was useful for you all and what more would you all like me to do during the session? Like what are the things you would want me to incorporate? So was the session today useful? Especially to the self-studying students. Anything that you all would want me to incorporate into the session? Yeah, that's what I told you. My notes are pretty simple. Okay, if you all want that, you would send me a message. I will share it to you. You all can take my message from the TRG group. Send me a message, I'll send you the tute. Whoever wants the tute, send it to me. Okay. And anything you all would want me to incorporate. This is how I'm going to be doing it. I'll just roughly go through the short notes. It's actually my note, which is quite short. And with that, I will do one question, right? Towards the end, if we have time, maybe we can do more questions on the difficult areas. But I'm looking at just doing at least one question from the area, relevant area. Next class, I'm starting throughput, right? Okay, guys. So good night to everyone. And we'll meet next week. But meantime, if you all have doubts that you all are collecting, please send that on the group. So that by next week, then I'll, take another 15 minutes to go through that as well. Okay, guys? Right. Okay, no problem. Right. Then if you all want the tune, just send me a message, right? I'll send it to you all. I think the students from my class already have it. So the others just send me messages. Bye-bye. See you next Friday, inshallah. Bye. Assalamu alaikum.